unthinkable is unleashed. 27 days until silver changes forever. A serious disruption is hitting the market, and this will change the price of silver in a big way. The elephant in the room are these major players that are operating behind the scenes, but in this video, I'm going to break this down for you and show the countdown has begun. I'm going to explain this and make it clear so you can be prepared for this major disruption. While I talk, I'm going to crack out this $100 mystery silver slab. Let's start. This is an article on Goldberg.com, and the heading is Towards a New Silver Short Squeeze. This article says it seems likely that last year's silver shortfall will be repeated next year. Current supply is unable to keep pace with ever-increasing demand. What's new this year? Check this out. What's new this year is the increase in industrial demand for silver, offsetting the fall in investment demand. Industrial demand is strong due to the increase in solar panel production. We've talked about this. Solar panel production in China. However, this demand also extends to India, which plans to quadruple, you heard that, quadruple its production capacity by 2027. This increase in production is helping to accelerate the reduction of stocks on the Chinese market, and as stocks on the Chinese market fall, silver premiums rise. This article shows that the change coming at us for the price of silver, the change is twofold. First, large premiums, and now, listen closely to this. The article continues, with silver premiums on the rise in China, one wonders whether we are on the verge of an arbitrage phenomenon similar to that which has already occurred in gold. The persistence of premiums in Shanghai has had the effect of sustaining the rise in the price of gold since last September. As observed at the beginning of this week, this is what this article says, as observed at the beginning of this week, as soon as the Chinese market opened, silver started to rise again due to the differential between silver prices quoted in London and those quoted at a much higher level in Shanghai. Will this price differential continue to drive up silver prices? This is what the author asks. Will we see demand for physical silver, demand for physical delivery on the COMEX from investors wishing to take advantage of the price differential between the two markets? Or will the arbitrage between Western and Asian silver prices accelerate the drainage of COMEX stocks? This rush to the COMEX, watch this, because this part is key. This rush to the COMEX comes at a time when commercials have not significantly reduced their short positions in futures contracts. In other words, Asian demand could potentially lead to conditions conducive to a short squeeze on the COMEX. However, and this is again according to the article, however, unlike the last silver short squeeze of 2021, we remember that, the demand this time isn't coming from degenerate investors. That this is the author's words, not mine. Degenerate investors or silver bugs gathered on a forum looking to hoard coins and bullion. That's what happened in 2021. This time, according to this author, demand is linked to industrial shortage in anticipation of a sharp rise in silver consumption for solar panel production in India and China. Under these conditions, a possible silver shortage squeeze part 2 could probably have a far more significant impact on silver prices. So what do we look for? As you and I, as regular silver stackers, what do we look for now? How do we know if this prediction is going to play out? In 27 days, China will release their PMI and industrial production reports. That data shows the massive demand we are experiencing for silver, and more importantly, it will show the shortage to meet that demand. The countdown has started. Markets always respond quickly to a release like this, and as silver stackers, this is the data we need to be analyzing. Let's crack open this $100 mystery silver slab. I want to thank RUA Gold for sponsoring today's video. Their ticker is NZAUF. In August 2020, when gold broke $2,000 for the first time, you remember that? The index was 40% higher than today. Mining is the cheapest it's been compared to the overall U.S. economy since 2015, when gold traded for just over $1,100 an ounce. This is the starting point. We're in a bull market, and it's just the beginning. New Zealand's largely unexplored South Island was formed by similar tectonic processes as the Fosterville mine in Australia. Let me make this clear. That is the mine in Australia from which millions of ounces of gold have been extracted profitably, turning Eric Sprott into a billionaire. I need to use a hammer to get into this. The mineral riches of this land are well documented and known to be world-class, and a tidal wave of change in public opinion is fueling a mad gold rush in New Zealand. It makes sense, then, that Eric Sprott is a key shareholder in RUA. I consider it a great gift to tell you about RUA Gold when it has a market cap of only CAD $40 million. $40 million. In 3 years of exploration, RUA Gold has mapped the historic mines and made a promising new discovery. 16,000 soil samples collected and analyzed, the most comprehensive geochemical data set in the Reefton goldfields. Detailed geological mapping of historical workings has been completed, and UAV magnetics have defined exciting targets for the 2024 work program. I give up. Let's get a knife. Over the past 3 years, RUA Gold has been operating as a private company with over $8 million spent. The team has completed the detailed work, including tenement acquisition and management, access agreements, mapping, rock chip sampling. Now drills are turning on for the next New Zealand high-grade gold discovery. This is the time that I like to get in on a company, right when they are starting to drill. We've never seen gold trading above 2,300. We've never. Silver trading at 3-year highs, the GDXJ breaking out to a 52-week high, all happening at the same time as the Federal Reserve ready to cut rates. With historically high inflation rates, gold stocks are in its best position in the best 15 years to make a dramatic move higher. Gold might double from here by the end of 2027 to 2030. You heard that, double by 2030. Silver might triple by the end of 2027, but the junior mining sector will go up 1,000 to 2,000%. If that happens, just think about the speculative portion of your portfolio, about asymmetric best, about ways to really get involved now. Before this skyrockets and the opportunity is gone until 2040, this is the time. I'm telling you, this is the time to get on a mining company, the exploration stage, just when they are ready to drill. I urge you to do your due diligence and check out RUA Gold. Their ticker is on your screen, NZAUF, and there it is. Check it out. That is a mint condition Walking Liberty half dollar. My favorite design of all U.S. coinage. Perfect. And this one is going straight to the stack.